Hop in the car, watch it go vroom, vroom. I told her mom that I blow soon, soon. Knew as a child back in the womb. Oh, told her step back, I need my broom, vroom. Hop in the car, watch it go vroom. I'm in a whip, so I gotta zoom. They tryna talk, they not in a room. I been so real, I'm dead to the tomb. They in the way, they gotta move. I got a gas, they running on fumes. Told them way back, it's something new. It's me and Dan, you gotta choose. I'm taking what's mine, I'm doing fine. Don't see the vision, they looking so blind. I hit my lawyer, I don't got the time. Crossing my T's and he dotting those eyes. Don't take offense if I do not oblige. I can't belabor like none of these guys. They hit me once and I'm cutting the ties. I was so low, but I'm back on the rise, it's real. Hop in the car, watch it go vroom, vroom. I told her mom that I blow soon, soon. Knew as a child back in the womb. Oh, told her step back, I need my broom, vroom. Hop in the car, watch it go vroom. I'm hopping now I gotta go. I'm looking back, they not even close. I had a 4, now I need a ghost. I got a wave like I'm on the coast. Same ones are down and I dare the show. So way that I'm ballin', they think I'm a pro. I'm getting sick by the money I gross. They saying whoa, I told them all what this is. I told them all I don't miss. Said it's my time, look at this shit on my wrist. And when they shooting this brace, I'm going in a new gear, gotta shift. I cannot stick to the script, I cannot wait. Watch how I get it and flip. It's just how I'm doing this shit and I'm gone. Just how I'm doing this shit and I'm gone. Ayy, just how I'm doing this shit and I'm gone.
It's the motherfucking intro. I'm just trying to get that money like 1-0-0-0-0-0-0-0-0-0. I'm here with Gino.
Hey, Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac. Represent. On my block, try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot, I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to gain. I wanna get that big bag, need that D-Rex. Blow up Tic Tac with a blue cheese at. I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that, kick back. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I'll motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. A lot of stake, hustle till we get a lot of rooms, a lot of stakes. Good kid, but I keep it gangsta. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player.
Danger, coming with them bangers. With my fucking paper.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like. Yeah, you about to see me on demand like. You know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah,
And it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream and Bitcoin with the pop from the 786. I don't even know if you would call this a pop, more like an explosion here. Pushing past our next major target. I want to talk about why I decided not to take short positions at that target at around $68,000 that we looked at yesterday. There were some very specific reasons. I'm going to talk about the next targets to the upside. If we are able to continue up, we'll talk about the probabilities of that happening as we are now accepted back inside our value area, still pretty much within the chop, but very nice bounce to the upside right off the 786 Fibonacci retracement. And as you guys know, I did not take a long there, so I am not holding a position right now, at least on the long side. Still holding my shorts for much higher, and maybe I could help some people simmer down their FOMO, because I'm in a very similar situation. So I'll kind of show you how I avoid getting wrecked in situations like this. But what is going on, Mafia? Welcome in. We got New Earth Guardian. Darren Does Things in the chat. Mr. Market, Nick Dunn, Visionary Pulse. What is going on, guys? Let's see. We got DJ in the chat, said HWG. I think that stands for Here We Go. Perry in the chat. Let's see. Spiky Fish. Shout out to Spiky Fish. Welcome in. Shout out to Rudish, said, I'm in a trade, took the top. Hopefully we go to the value area low at 65.5-ish. We'll talk about that. We do have a value area high sitting at about $70,000, so we'll talk about that. It's right where the 786 sits. And we also did talk about some of that liquidity we have above $68,000, obviously potentially giving us that kind of big push above. We cover kind of specifically what I would be looking for there, so we'll cover that as well. We did take that liquidity. Let's see. We got Crypto Brave in the chat. What is going on, brother? Welcome in. Nick Dunn, Rockstar Cola said, Rockstar Cola has entered the chat. Welcome in, brother. Happy to have you here. But we got a lot to look at here on the charts, guys. So without further ado, let's go ahead and jump on into the Bitcoin charts. Let's get into it. Let's see. Shout out to Eric Traven says, so long at 62K was not a good option. Not that it wasn't a good option, right? And I kind of want to talk about this, right? Because I am not long from the low here, which is kind of a uncommon situation. But I was actually just talking to Tony D kind of about psychology because he didn't take along for whatever specific reasons. And I was kind of just trying to talk him through it. Like, listen, man, I'm in kind of the same situation. Does it bother me? Not really, right? Like maybe there's somewhere in the back of my brain where I'm like, dang, I missed the long. But of course, right, there's tons of opportunities on the chart. You know, I always say missed gains are none of your business. So if you're not holding along here, obviously, you don't want to FOMO in. I mean, you could if you want, right? Maybe you catch a bigger pump. But, of course, we'll break down the TA and kind of show the higher probability outcomes. But not only, guys, obviously we did have the 786. And the one thing here, right, the only reason that we were looking at this level was just very simply the fact that even the golden pocket here, the only reason we really look at this key level We also had confluence here on the daily horizontal. If you guys watch the live stream, you will know the two kind of last levels of support before the $69,000, the $60,000 low here was the golden pocket or the 786. And here's the thing, right? The reason I was interested in these levels at all was the fact that with this being a golden pocket 786, right, from the low to the high, right, you have a low, a high, potential higher low for a potential higher high, could be in the cards, right? I'm going to talk about that from a liquidity standpoint as well. And that's kind of like the one thing that looked okay about this, right? And not only, right, like I have a little bit of added kind of psychological battles to kind of deal with, right? Having a Discord, having the YouTube channel, more the Discord in general, because that's where we actually take the trades. But try this, guys. Try giving the valid setup and then just not being interested in it personally, right? Because these levels did not have a lot of confluence. So this obviously was a setup we were looking at in the Discord just for the simple fact of course, right? There's so many different things that can happen in the market, right? But context has a lot to do with my overall bias. Also, like being in massive profit after shorting, not the top. Well, we did short the top, but that wasn't the trade. That's not the trade I'm talking about. But the shorts from 98K. Just not really looking to force any trades here. And with the lack of confluence on these levels, right, with the magnetic level of the value area low sitting just underneath us, this was part of the reason why this level was not as interesting to me, because you're still within the volume profile overall, right, this larger volume profile, and you got to fight above that POC. You got to fight above the value area high. But, of course, as always, with this being a golden pocket 786, it is also, this is, I think, where a lot of people get tripped up. People always say, like, are you going to put in a higher high or not? Well, at the end of the day, both options are open, right? And you just kind of have to make a decision, stick with it, and if you end up missing a trade, right, that's okay. If you wind up losing a trade, that's okay too. You're not going to catch every trade. You're not going to win every trade. That's just a fact of the matter. But, of course, you just have the daily in the 786 down here. You can look at this as a big zone, but of course, right, if we ended up losing this level, right, you have the magnetic volume value area low underneath you. Oftentimes, statistically, right, you do have a higher probability of coming down to visit that value area low. Technically, if we stay inside the profile, right, maybe we just kind of bing bong around here and then we eventually take it. We'll kind of talk about that in a minute. But really, the only reason I even talk about these levels is because at the end of the day, even if I'm not personally interested in taking the trade, doesn't mean it's not a valid setup, right? Because of course, you could be looking at this from a Fibonacci standpoint. Maybe you don't even pay attention to volume profiles. And at that point, right, you have to understand low, high, higher, low for a potential higher high to come. So just to kind of give a kind of view on the level that we're bouncing at, this is literally the last level, which kind of makes it nice, right? Because holding this level was very important, and it is the last level to hold in order to continue to entertain some kind of a bigger pump from here, right? Giving that higher low and potential higher high. And again, we'll talk about the probabilities of that on today's live stream. I'll kind of talk about it from a liquidity standpoint as well. As you guys know, we looked at the liquidation heat maps yesterday, identifying this liquidity up here, where we had two major targets yesterday, which obviously both ended up getting hit. Let me go ahead and take off the dailies. We'll pull up the local volume profile. Local level number one, right? Value area low 786. Obviously, we were able to, we did get a reaction from that golden pocket, right? We come up, we tap it, we put in a higher low, and then we break back into this value where I pull up that next volume profile sitting right here, right? Pretty much the same levels. Once you get above that value area low, talked about this in the Discord last night, if we're able to reclaim the value area low, the next zone to look at as a target would be the POC golden pocket. Also, we had a weekly MPOC in here, right, giving this kind of larger zone. We even marked out this liquidity on the live stream, kind of letting people know, right, like once we tap in here, could create a little bit of a squeeze to the upside. This was kind of that next big level of resistance. But when it comes to trading, for me personally, I like to set those traps, gauge the reaction as we tap in, and I only take the position if we actually have confirmation to take a short, right? Here, it was kind of just a straight run through. We had no real bearish divergences, no real entry triggers. And on top of that, playing around with this liquidity, of course, would give us fuel to push higher. And on top of that, guys, on this push to the upside, we had a massive shorts opening, right? Which is another reason why I was not really interested in taking that short position. Sometimes avoiding a bad trade is just as important as finding the good ones. As we're pushing up here, right? It's funny. Somebody yesterday said if we pump, it's going to be an extremely hated rally, in which case we talked about why it would be, right? But does seem to be a hated rally, right? It's pumping. Everyone's like, oh my God, short it, short it, short it, short it. But we could see those shorts coming in, which obviously would create just more fuel, people shorting, giving us that liquidity above, continuing to squeeze the shorts to the upside. So we were able to see that earlier, and that kind of caused me not to take that short position. Of course, avoiding a bad trade, of course, especially when we were tapping into the beginning of the level, right? Obviously not going to short here if we could see a potential squeeze higher. So again, being able to actually look inside the candles and see the shorts opening, understanding where those positions are, can kind of help you avoid those bad trades. So didn't take that, thankfully. And now, where are the next targets to the upside? Now, of course, just looking at this from a typical volume profile perspective, I'm going to go ahead and take these take the liquidity zone off the chart, and you can even see that on the heat map. Obviously, we looked at this yesterday. The closer you get to that liquidity, right, the stronger that magnet becomes, which is kind of like another confluence there. It's like as you creep up here, it's like, hey, there we go. Maybe we can come take out that liquidity, right? So target tapped. No trade taken, right? Not every level on the chart, not every trap that I take equals a trade. Remember, me personally, I'm a reactionary-based trader, right? Like, if I don't see those confirmations, I want to sit out for very clear reasons, right? I don't just want to set those levels, set limit. This is exactly why I don't set limit orders. If I were just to set a limit order here for a short, right, I mean, depending on how high your stop loss was, you probably would have just gotten cooked on that. But if you actually know what to look for, in order to actually take those trades, it can really help you out greatly. But when we look at this from a volume profile perspective, of course, breaking above that value area low, I'll take that weekly MPOC off the chart, right? Value area low is resistance until proven otherwise. We ended up coming down here and putting in a higher low right here on the golden pocket, and then getting back above here earlier this morning, flipping that value area low, making the next target the POC. And at this point, guys, the next target to the upside for two reasons is going to be the value area high here at about $70,176. Doesn't mean we can't pull back first, but when we look at this from a golden pocket perspective, let me go ahead and pull this up real quick. Whoops, where's it at? Right, you have the golden pocket, which was confluent with the POC. If you're not going to get the reaction there, if we're able to hold above this golden pocket and a point of control, right, that next target within the profile is going to be the value area high. And once you break above that golden pocket, the next stop for price is very likely the 786. So I would say about $70,000 to $70,200 is going to be that next target to the upside, of course, based off the volume profiles and the Fibonacci retracements. Pretty similar to what we saw back here on the older profile before we had all that other development here before we extended that profile to the right. You guys can see here, right? We actually did take this long. Bull dips below the low, right? Get back into the value area low. Same thing, right? This is repeatable. You get above that value area low, right? Next target becomes the POC. Break above the POC. You're looking for that value area high. Same plan there. Same plan here, right? Now, I did actually, just to be fully transparent, I did take a small short position there that I got stopped out of, right? So I don't win every single trade. But what happens when you come to the high? Bearish divergences, right? You wind up seeing your money flow come out. You get the rejection for another fulfill the profile. So it's kind of the same plan here. And, not this one is not the one I'm going to be looking at, but this range here, POC currently sits at, let me hide some of this stuff. Bada boom. Hide the fib. And hide the liquidity box. Where's that at? There it is. Okay, so we also have the anchored VWAP in there as well. So, we hold above these levels. Essentially, right within the profile, the POC is the important level to hold, and then we could potentially see that $70,100 and almost $70,200 value area high, confluent with the 786. Right, simple volume profile theory. Of course, it's not always a clean, just straight shot up there. Of course, you can get little chops before making it all the way up there. Same thing on the way down. Right, you bounce off the POC, you get a big big retracement, right, and then you come back down and you eventually revisit that value area low. So that's the plan, right? Very simple volume profile theory, right? Getting above the value area high makes it a very easy target to get into the POC. Same thing here, right? Just want to keep that nice and simple without all the intermediary levels. I know once we start looking at stuff like this, it's like, oh my God, where should I take a short? Where should I take a long? But just very simply looking at the simple volume profile, these are the most important levels in my opinion. And of course, POC sits at about $67,953. As long as we're able to hold that, right, we could push into the value area high. Of course, you could lose this slightly, even retap the value area low, but that will be for our future trading plans. We'll take a look at those levels, very similar to here, right? You go down to the POC, retrace all the way to the high, and then you eventually get the fill back to the low. This is obviously identifiable based off money flow, how probable that will be, but just biggest target to the upside right now going to be 70,000, call it 70,200, between 70K and $70,200, right? 70,002 to about 70K, right? Bada boom, right? Now, that is kind of the local analysis here, right? And you even got some nice bull divs down here at the 786. Of course, unfortunately, I'm not in that position, but not worried about that. I kind of want to, like, show that, right? Like, I don't care. I was trying to tell Tony that because he was like, man, I should have longed it. And I'm like, dude, I'm in the same situation, but I just don't. I maybe I feel it, right? But I just don't react off of it. I don't let it get to me, right? Because once you start letting it get to you, that's where you get into really dangerous situations where it's like, oh my god, I missed the pump. You start to long the top, and then you're just better off waiting for your plans and your key levels to wait for your next trade. Very important. I know I covered this a lot, guys, but it is because it is literally the most important thing. And shout out to Tony D. He goes, I kind of realized that understanding the charts and understanding what the price is going to do is about 5% of the battle. And that's what I talk about all the time. And I was like, I know like people hate hearing me say that, but you're now experiencing this in real life, right? You could be like the best analyst, right? You could see this. And I told them, it's like, imagine having a situation where like you have a valid setup there, you just don't take it, right? But you just kind of have to control those emotions, right? It is the most important thing. It's not woo-woo mindset stuff. It is the truth. Let's see here. Shout out to Bailey, said I should have set a limit order at that 786, was waiting for it to hit. Now I'm longless. Shout out to Bailey. I would actually disagree with that, brother. I would not set, for the same reason why I wouldn't set a limit order for the short, right? You would only be regretting not setting a limit order down here when the trade plays out, right? If the trade were not to play out, which obviously will happen, right? You would be sitting there and saying, dang, why did I set a limit order there when I would expect the value area low? Right? Same thing at that short level, right? If we were dumping from that short level and you didn't set a limit order, you'd be like, why didn't I set a limit order? But right now, you're probably happy that you didn't set a limit order, right? It's the endless psychological battle of trading. But the beautiful part is, obviously, there is going to be plenty of other trades to take, right? I've missed many of trades in my career, so if you missed anything here, just understand, right? I say this every day. You miss this trade, you can catch this one. You miss this trade, you can catch this one. You can catch this one. You can catch these. You can catch this. You can catch that. You can catch this. You can catch that. You can catch this. You can catch that, right? I was telling Tony, like, I don't even remember the trades that I missed, right? That's how insignificant they are to me, right? Missed gains are none of your business, right? If you view the market like that, every time you don't win the lottery, you should see someone else win a lottery and be like, man, I should have played it. I could have won, right? It's just none of your business, right? Especially because you could always play the lottery the next day, right, or the next week. I don't play the lottery. I don't know when they pull them. Would the daily green dot being printed be considered a bull div? It's a bit wonky in my opinion. Yeah, not really. Not in my opinion. Even if it does end up playing out some more, which I'm going to talk about in a second, I would not consider that a bull div, right? I either like to see the bull divs on the bodies of the candles, right? That's what I prefer, is to see the bodies of the candles. If not the bodies, I want to see them to the wicks. You have neither here. Really all you have is like body to wick, which not what I look for, right? Even if it continues to pump, I wouldn't really see this as a big confirmation. So no, I wouldn't say so. Not the way I classify them, right? If this wick were to come down and break and then the body closed up here, then you'd have a wick divergence. You don't have a body divergence or a wick divergence. It's kind of more just like a high or low, right? I would see this as more of a low, high, high or low, and then if it continues up, it's like, oh, okay, well, we bounced off the 786. That's why these levels, oftentimes, right, the 786 is usually the line in the sand for me, right? Anytime I bring up a line in the sand, it's usually every single time it's the 786, right? Because once you lose that 786, the idea of the low, the higher low, and the higher high is invalidated, right? Once you lose that 786, much more likely to come down and take that low, especially if you have a key level down there. But of course, if you hold it, right, well, it's still valid, technically. Now, it doesn't mean you're guaranteed to make a new high, but, this would be valid, right? Solid mindset, bro. Hard to say there won't be a long opportunity on the next golden pocket retracement. Yeah, shout out to Dar. I mean, again, right, like if you zoom out here, I also think, like, Bitcoin's also been so dead, right, that, like, any kind of movement feels super significant, right? If you just zoom out, right, like, obviously this is nice. It could turn into something much bigger, but, we're at prices we were at, on the 16th. So it's not like, people feel like they missed the bottom. Oh, my God, right? Well, there's going to be tons of opportunity. That's like saying back here, that's like saying come back to 2021. I mean, this would be assuming, right, that the bottom's in, which I'm not saying. But that's like saying, like, oh, my God, I missed the bottom, and then getting in here, right? Oh, my God, I missed the bottom, and then getting in here. And then it's like, of course, right, like not necessarily looking to hold my leverage trade that high. If it wound up playing out, then that's great. But it's like when you zoom out, right, like we're dealing with more of candles like this, right, not candles like this. So there you go. Now, I do want to talk about if we are to continue up. When we pull the liquidation heat map, right, like we don't really have a ton. Let me actually I have to pull this up on a higher time frame. Come on, CoinGlass. You can do it, baby. You can do it. Come on. Let's pull it out to the 1 month. Let's go a little higher here. Trying to find the significant liquidity, which obviously you can see the levels that we just took out right here. So you can see, right, we do have some liquidity above, guys. And kind of the theory here is we've talked about this, where although, right, we're obviously in a bear market, we have come down to very, very, very key support. Right, I'll pull up the top levels. I kind of leave these here just to kind of show. Once we lost this range, right, we look to come into our previous area of value, which is sitting. Oh, I have my TI hidden. There we go, right, which was obviously sitting in here. We went from the high to the low, back to the high. We're still banging around in this volume profile. But, of course, not only did we have this volume profile, which is big support, but we also had a ton of horizontal tapped levels, which hopefully I still have on the chart here. I may have deleted them. But, of course, we had a ton of MPOCs in here. We had a ton of support, right? We had MPOCs, we had horizontal levels, tons of support in here. And this is kind of where people, whether the bottom is in or not, right, this is where people get super, super bearish, very clearly identified here, even on the local moves, right? Like people just super bearish, like, oh, this is the last time to short. As you could see them just all funneling in here on that push to the upside. But as everyone is bearish here, right, everyone's kind of building shorts, right? Meanwhile, right, obviously, we were building our shorts all the way up here, right? These shorts I would consider late, right? Late shorts are almost always punished, right? Almost always. So you don't want to be too late to the move, but I would say, like, from a grand perspective here, I don't know, everything probably flipped. Oh, my God, bull market overnight on social media, but the thought process is, right, like these would be, in my opinion, late shorts. This is not where I was looking for shorts. All my shorts were from higher. The only thing you can really look for down at these lows is longs, right? I would never look for a FOMO short here. I would never look for a FOMO short here, etc., right? The only thing you can look for is longs. Doesn't mean I'm going to take one, but it's the only trade that I would really be looking for. Now, as people are getting bearish down here, obviously, we are building liquidity. We knew, because on the heat map, that's where that hotspot of liquidity is here on the liquidation heat map that we just took out. All those stop losses are going to go above previous highs, right? So you have liquidity up here. You can also say you have liquidity above this high. You could also say you have liquidity above this high, right? Try to get that as close as possible. So I would say, right, if we could continue to squeeze here and start breaking out of the volume profile, and we'll take a look at it from a market cipher perspective as well. Of course, we have resistance, but if we start cracking out here, right, you could start to see these shorts really get punished. And the thing that makes me look at this is the fact that, like, you could see how the shorts just continue to funnel in on that push to the upside, just adding that fuel. So I don't know if this is going to happen today, next month, this month, March, April, who knows, right? But, you know, if we do get the correction here back down, maybe we take out the low. Of course, this is, I'm not going to try to predict these long-term moves like to the dollar or anything like that. But at the end of the day, if we start seeing aggressive pushes up here, right, these shorts could start to squeeze very fast. And we've talked about, you know, back last week and the week before, right, talking about that $72,000 level being a very, very big level to potentially start to see a larger short squeeze, maybe into the 80s, right? Now that we've obviously talked about that before, that still remains the same. But when you start to look at this, right, we start taking out these highs, there's likely a lot of liquidity up here. I'm not saying that it has to be the next move, but, you know, once we start cracking up here, you start cracking $72,000. Not only do you have the idea that obviously this is the biggest swing high, right? So you'd say, like, anybody who has, like, the degenerate stop losses or maybe liquidation levels, right? People may be FOMO shorting here. I don't know why this is not on my template, but whatever. TradingView is geeked out right now, right? Their stop losses are going to go above this high. They're going to go above this high. They're going to go above this high, right? Even people shorting here, their stop loss is going to be likely above this high, people shorting here, their stop losses are likely going to be above this high. Right, and I would say after this big drop down, big retracement, a lot of people looking to short, big bounce, big retracement. This is a big area, right, for people to enter shorts, right? This is kind of induces sellers. So, probably a lot of liquidity sitting up here. And if we take a look at that liquidation heat map, this is sitting at 72,000, about 72.2. Right, there it is, right? We do see that hotspot on the heat map, right? Liquidity zone number 1, liquidity zone number 2. And you can see this is a pretty broad zone. The hotspot is obviously just above that high, but it's really between about 71, 175, like kind of up to 75K. And once you start pushing into here, it's going to create a lot of market buys, potentially causing a bigger squeeze to the upside. So on top of that, right, another view that we have on this is not only from the idea of where the shorts are actually sitting, where the liquidity is in the market, but also from a volume perspective. We've taken a look at this large low volume gap that we have here, which typically does facilitate either fast moves down, or once you break back into that gap, right, I'll mark out this gap to make it nice and clean, right? I'll just rough it out here. Bada boom, right? Low volume gap, high volume node. High volume node, low volume gap, right? So if you put that right here, start that at about these highs. Once we start breaking into that zone, not only do you have the idea of the short starting to squeeze to the upside, but you also have the idea of the low volume gap. Again, oftentimes facilitating a fast move down or a fast move up, right? Even got a little sketchy down here. So you have kind of two things to look for, right? This would probably, right, if we break this and we wind up filling that gap in full, it's about a 15, almost 16%, 16% move to the upside. Now, I'm not here to create FOMO. Oh, my God, long here. We're going up there. Again, we'll have to identify what happens up at this next key level, right? We could potentially go down before that happens, right? I'm not here to predict exactly when that's going to happen, but if and when, right? If this, then that. If we get up here and we start popping into this gap, just like here, right, on the way down. We didn't know if we were going to break into the gap here. We didn't know if we were going to break into the gap here, start losing in this and break into the gap, break it here, break it here, break it here. But we knew once we were holding that short from $98,000, we could say to ourselves, well, hey, once we break into that gap, right, we already have profits locked in, stop loss at break even for a guaranteed winning trade. And then we can say, once we break into that gap, guys, this thing might be able to turn into a massive, massive, massive swing trade, which it did, right? And what happens? You break into that gap, absolute free fall. It would be the same thing on the way up with the exception of a little bit of a high volume node here at about $78,000. But overall, right, like this is very low volume. So two things there, right? Liquidity, short squeeze, and the low volume gap also facilitating that move. It's the exact same thing, and hopefully you were here. If you were here, let me know in the chat. If you were here when we were looking for this to happen, and it's like once it happens, not only do you get that short to continue playing out, not only are you looking at this like, oh wow, the low volume gap does work, but also, right, you kind of have an idea of, you're not sitting there like, oh my God, what is happening? Why is everybody selling? You lose a lot of that emotion because you're just expecting that if you lose this level, you're going to break into that gap and get the fast move down. It's a good way to kind of delete the emotions because you actually understand what's happening here on the volume. So just to kind of point that out, right, if this is going to be a higher low, right, if this does hold and turn into a higher low and we wind up cracking above these levels without some kind of quick little SFP dip for a move back down, we start decisively breaking in here. Could be an exciting move, right? Again, not telling you to long right now for that move, right? People be like, what happened? I thought we were going to 80K. I thought we were going to 84K. What happened? It's like, well, that's not really how the charts work, right? We never got to that gap, right? For example. So just to kind of give you guys that viewpoint, you can mark out this low volume gap. I would say for the most part, you can kind of even separate it into two gaps, right? Between about 72,000 and 78,000. And then you kind of have this, secondary fall off in volume, right? This high volume node is probably going to give you a little bit of a sticking point, like it created it right here. But you do have another kind of low volume gap just above that. I prefer to just look at this as a big zone. But that is keep that in mind, right? We can for sure, if we get above there and start seeing those short squeeze, see something like that happen. Again, I don't know when it's going to happen, but again, if this, then that. Let's see here. Let me jump back into chat. BTC overbought on the 1 hour and 4 hour, not looking good. Shout out to Visionary Pulse. For me personally, I am not seeing it overbought on the 4 hour. You do have a potential bearish divergence looking to form, which is, I was going to say, overbought is not really what I prefer. I mean, obviously, it means something, right? When you start to get a little overbought here, you get a correction down. But what I do prefer to see is bearish divergences, right? VWAP looking to, maybe from the VWAP perspective, right, this is kind of just cooking to the upside. It does look a little overextended. Technically, from like an RSI or an actual overbought or oversold perspective, maybe not. But it does look a bit overextended here. And if we do end up, right, like how do you kind of handle this, right? In my opinion, right, again, sitting out of the short position here, clearly seeing the shorts coming in, adding the fuel for more upside, good move, right? Great move. But, you don't always have to snipe the exact top, right? I would prefer to see a loss of that POC, maybe, or even like the loss of the SFP level to potentially look for the bigger drop down towards the point of control. And then the only thing here is, let me pull up the local profile again. Yeah, it would be these levels that I would really be paying attention to, right? Like right now we're above the golden pocket, right? At this point, until we lose this, this is kind of a situation where I'd rather wait to see a little bit of a sign of weakness. Because at the end of the day, right, if you were to just take a short here, I'm not here to tell you what to do with your trades. You can do whatever you want. But if you take a short here, I mean, you could, right? Like at the end of the day, like if you wanted to, as long as you're managing the risk and you're not going to get absolutely wrecked if you get another push up, you just have to make sure you manage that risk, right? But, if you hold on top of this golden pocket in this POC, it's like you take that short, maybe you can lock in some profit super early, right? Let's say you just take it here, right? It's not a huge move to the POC, right? I guess it's a 1.24% move. Risk to reward's not that great. It's almost like a 50-50. And then, if you hold this and then you get stopped out and you lose that trade, like, will you be upset, right? When you take a trade, you have to accept the risk. That's why when you get wrecked, if you're like, man, I got wrecked, that means that you didn't accept the risk that you took, right? Every time I get stopped out, I'm like, okay, I had a plan. My plan went this way instead of this way. Either way, I was accepting of it, right? Obviously, I prefer it to win. But if it loses, when I put it into my exchange, when I go on to Femex, whatever, Blowfin, wherever you're trading, you set your stop loss. It'll say, if this stop loss triggers, you will lose this much, right? It tells you how much you're going to lose. You have to put that into a percentage, right? I always say 1 to 2% of your account. And if you're risking 1 to 2% of your account, that is, in my opinion, a very good controlled risk. You're not going to win every single trade. If you win, even 3 out of 5 trades, 2 out of 5 trades, if you have good risk management, right, you're going to be able to stay in the game long enough to let your winners move your P&L up over time, right? Most people just want to gamble. They want to catch the low, right? They see situations like this, and then they chase this, right? The next 786 you come down to might not play out, right? You don't just want to long it with no stop loss. So you just have to ask yourself, like, if you're willing to take that risk, that's totally fine, right? Then you're just going to stop out, and you'll be like, oh, I'm not surprised. We held the POC, and we went to the value area high. That was super high probability. You could take it. It might not play out. But that's not a bad thing, right? As long as you accept that. And you're not getting absolutely cooked. So a way I would prefer to handle that is to actually see these key levels lost, right? So when we pull up that weekly MPOC, the golden pocket, the anchored VWAP, we're currently above all of these levels, right? And it's not that you can't front run it, right? Maybe you're like, hey, we took out the liquidity. I'm just going to take a shot, right? I wouldn't say you have like a super clear SFP here, right? So you don't really have a entry confirmation. So for me, that's no trade. But at this point, it's like you're above all your resistance, right? So I would more likely like to see at least a loss of the golden pocket, more importantly, the POCs here, right? And then sure, you're not catching it from the tippy top, but if this does end up going back down, you're going to have a nice trade to play. Let's see. Shout out to Mr. Market said if you keep your capital high and your leverage low, sniping entries becomes less necessary. Yeah, if you're using high leverage, right, if you want to take a bigger position size, which I typically like to do, catching a entry at the low is easier, right? Because your stop loss is much lower, right? Like here, your stop loss, let's just say you wanted to take this on the bullish divergence. Let's say you entered right, you get in somewhere right here. Right, your stop loss is very tight, right? You're just like right below that 786, and then whatever, you're looking at the value area high. Like that's a super good risk to reward, super tight stop loss. The tighter your stop loss, the bigger the position size. If you don't understand what I'm saying right now, go to the beginner series and watch. I believe it's called the Only Leverage Trading Tutorial You Need. The risk, right? The amount of money you lose on a high leverage trade shouldn't be more than a low leverage trade. That's how. If you look at leverage like that, you need to more deeply understand how to use leverage in a actual responsible trading manner, not a gambling matter, right? A lot of people just think the higher the leverage, the higher the risk. That's not necessarily the case. Go check out that video. I explain it in full in that video. I think it's like an eye-opener for a lot of people to actually use leverage not as a gambling outlet. I love when people come in and are like, you leverage trade, you're a gambler. And it's like, come on, bro. Come on. Come on. You can't say that so confidently when you need to. Maybe you're not as informed as you think you are, right? But it doesn't mean, right, if you take lower leverage, you can, if you want to have a wider stop loss, another thing you can do is you could technically still use the same leverage. But that wider stop loss, you could take that, right? You want to take a retracement entry. Maybe you don't want the tight stop loss. You want to put it below the low. That's okay. You have to lower your position size to account for that added percentage on the stop loss, right? So if you get stopped out here on a leverage trade, right, or you get stopped out here on a leverage trade, you should really lose the same amount of money, whether you're using regardless of your leverage, right? You can still use high leverage here. You just have to lower your position size. It's kind of like, go watch that video. I explain it in full. But if you want to take a super high position size, right, tight stop losses are the best way to do it, right? You snipe those entries, you can take a super high position size because you don't have a big percentage stop loss, right? Super important to understand that, right? I would recommend understanding that before ever even taking a trade. Otherwise, if you use 20x leverage here, 20x leverage here, most people are going to say, your loss is going to be much bigger here. That shouldn't really be the case. So there you go. But yeah, I would prefer to see a loss of these supports, right? And again, you also are kind of fighting the volume profile. You are also kind of fighting the volume profile here with the POC and the full fill to the value area high. So I would say for sure the next target, if we do continue up, is 70,000 to 70,200. And then of course, breaking above that, right, we have all that liquidity sitting up here and up here that could be looking to get taken. And if we do break up there, right, the next area I would be interested in for a short would be that $72,600 daily naked point of control. Let me actually double check the position of this because I think I may have accidentally dragged that up a little bit. Let me double check that. All right, let's see here. End of week will be interesting. Shout out to Drop Shots for sure. And again, right, like another reason, right, just to kind of look at this simply. When we pull that golden pocket 786 from the high to the low here, right, this 786, just like, it's the same thing here. Come on. Give me that wick, baby. Give me that wick. This 786, right, if you're looking for a continuation down, right, for a lower high, lower low, right? High, low, lower high, lower low. That 786 is the line in the sand, right? That's where your value area high is. Another reason that if you break out here and start holding this, right, not only are you looking to take out the liquidity, but also the lower high scenario is invalidated, right? And then the higher probability is that the fib from the low, the 786 that we're bouncing off of right now, holds as a higher low and a higher high, right? That would be the line in the sand. Just like this is the line in the sand to go down to 60K, which very nicely, thank God we held it. For those of you who did not want to go down to 60K, 786 would be the line in the sand to see the highs, right? Lose this, new low is expected. Lose this or break this, new high is expected. In any situation, not just this one, right? 85K is next. Shout out to X24. Could be the short squeeze. Just cover that through the low volume gap. Pull it up. There it is. I mean, you do still have some volume in here. I'll zoom it out a little bit. But there's your low volume gap. Again, 78K, you do have a little bit of a high volume node. Come on. All right, you do have that little high volume node around between 75 and, I would call it about 80,000, right? Which again, $74,000 is the lows from April, and then you have the $80,000 lows from November, right? So that's probably, not only from a volume perspective, but also, from just a structural perspective, right? Like a little bit of a wall here, even on the volume. break above that, very likely move up here, right? Might have a little bit of resistance there based off this low, but at the end of the day, that volume really sits up here towards about 84 to 85,000, which from a volume profile, auction market theory perspective would also make sense. Where is it? There it is, right? There's your previous volume profile, right? Makes sense, right? Anytime you have consolidation like this, you build out those higher volume nodes, right? There's your consolidation. Come on. There's your high volume node. Massive high volume node, right? Huge level there. So, again, I don't want to, of course, I'm sure a lot of people are, arguing online about the bottom is in, bull market. No, bear market is just starting, bears versus bulls. I'm not gonna kind of do that. But, if we hold there, right? We talked about this a lot, right? Like even zooming out like on a high time frame, you could just see kind of that low volume gap, right? Literally up to like 85, 86K. Like this is why I love the visible range volume profile, because it just makes it super visible. Without all these levels, understanding the auction market theory, understanding volume profiles, you could just look at this as, well, hey, floor, ceiling, nothing, right? Just air, right? And technically the ceiling would start at the shelf of volume, right? The anatomy of a volume profile, high volume node, high volume node, high volume node, high volume node, low volume gap, right? And then you have these ledges or shelves, right? Some people call them different, name them differently, right? But you have these kind of shelves, right? These are like floors, right? With the highest volume node being the strongest magnet. So you just look at this from a volume profile, or just a volume profile, right? Which is what the visible range is. Get above the wall, right? Nothing there. It's the exact same thing we looked at here. Lose this ledge, fast move down, right? So for the long-term moves, that short squeeze above 72K could be very likely. Not only does it line up with the liquidations, right, but it also lines up with the volume profile. There's that 72K high, right on that shelf. This is a wall until you can get above it. Once you get above it, nothing above you, right? That could cause the fast move. And you have to pay attention to the liquidity and all this complicated stuff. Just look at it like we looked at it for the way down. It's like just look at it very simply. This is not magic. It's not made up. It's not imaginary. It's true. Lose this, very fast move here. Nothing holding you up. Break this, fast move up, right? Obviously, you didn't have the high volume nodes up here, but of course, that was all-time highs. There's nothing above you, right? That's what created the low volume gap to begin with. And then in the same manner, right, lose these lows, we'd be saying the same thing, right? Break into this gap. Yikes. Very simple way to view the market. And it lines up with the liquidity and kind of the more advanced concepts that we look at. Let's see. Just make sure I didn't miss anything here in the chat. Fibs are no one in this run. Value area high. Shout out to Drop Shots. I don't know exactly what you mean by that. Shout out to Nico. What is going on, Nico? Welcome in. Shout out to Creighton C. Thank you for the super chat, brother. He says, to answer the poll, I don't know. I'm here for help. First, what's a candle? Second, why do they refer to candles as big green dillies in the Discord? Is it like the WNBA? We'll just say, what's a big green dilly? I'll just draw it out for you here. It's a pickle. It's just a green dill pickle. It means nothing else. It's just a green pickle. How you define pickle is up to you. Shout out to Creighton C. Shout out to Nico. Said, do you like prop firms? I talk about this a lot. I wish prop firms were a thing when I started trading. I'm not personally a prop firm trader. There's people out there that like only trade prop firms. I trade my own capital in a live account. I don't have to stick to the rules. I can kind of, change my risk to whatever I want it to be. So I don't personally trade prop firms, but I think it's an immense and a gigantic tool for new traders. Now, it's just like with anything. It's like with leverage, right? You don't want to just look at a prop firm as like, oh my God, I can get a 25K account, a 50K account, a 100K account, whatever it is. Let me just, not have any idea how to trade, jump in, just try to get access to that capital. Because what you'll end up doing is you'll just wind up taking the challenges and failing them. If you don't learn how to trade first, right, and prove to yourself that you can be consistently profitable, you kind of just wind up throwing your money away until maybe you end up passing one. But 100%, right? Because I always say, if you start off on a small account or even a demo account, right, I recommend starting to trade with a little bit of real money to get the, because again, on a demo account, you're not exercising the most important muscle in trading, which is the psychology. Of course, strategy, TA is important, but ask Tony D. He's experiencing this right now. He's like, I realize that TA is really only like 5% of it. I say it's like 20%, but you could see, obviously, it's like the TA, the setups is worth absolutely nothing without not understanding how to manage your trades or manage not manage your psychology or have the right mindset. That's kind of like woo-woo. You have to believe you can make it, right? Not like that. You need actual psychological discipline to follow your plan, right? It's an actual skill that if you don't have, you can build. And I think almost all traders don't have that when they first get in. Especially in a move like this, right? Oh my God, I missed the move. Well, we came back down, right? Oh my God, I missed the move. Well, you could come back down, right? Oh my God, I missed the short. You come back up. You kind of have to have your market experience to kind of understand that. But once you can actually prove to yourself, or maybe you just want to try to, the one thing I like about prop firms as well is it forces you to stick to their specific rules. Most prop firms have similar rules. Some of them have different rules, but it kind of forces you to stick to a plan, right? Because if you're not going to manage your own risk and you get a prop firm account and you're taking a challenge and you're forced, like you're going to lose the account if you don't follow that risk management. It's you're kind of forced to follow if you want the account, you got you want the money, you got to have good risk management, right? So I think it could actually also help you kind of expedite your process into having an actual risk management plan. It kind of forces you to follow that risk management. So I like prop firms. I don't personally trade them, to be fully transparent. I play around with some of them, and I probably will in the future as well. But I just trade my own capital. But I think it's a huge if they were around when I was a new trader, they would 100%. In my opinion, have expedited my process, because if I wanted that higher capital, right, I always say keep a percentage mindset, right, or not mindset, but a percentage view, right? Like if you could turn 100 into 150, it's the same trades, it's the same risk management as turning 100,000 into 150,000, right? So prove to yourself that you can make $50 on an account, and don't complain about I only made $50. I've been trading for a month already. I've only made $50, right? It's not about that, right? You have to learn the skill first. Right. And again, if you can grow that account consistently over a few months, maybe it's not even 50%, that'd be 50%. That's a lot. Right. But even if you grow it 20% a month, right, you could prove to yourself you do that consistently, then you'll have a higher chance of passing a challenge, and then you could just up the capital later. Right. You might say, well, it doesn't matter. I don't have 100,000 to trade with. Well, you can use a prop firm, but you still have to build those skills first to even get that account access. So I like them. The rules are helpful to me. That's why I keep doing it. I will pass. Shout out to Rooston. There you go. That's kind of what I would think if I was first starting. I'd probably hate it because I'm like, I don't want to follow these rules. I don't know. For me personally, I'm stubborn. I probably would have just wound up losing a ton of money on challenges. But that's me. I'm a hard-headed Sicilian. So, but I didn't get to avoid. I just burned a bunch of money on live accounts anyway. So, when Frankie Hold Me prop firm. Shout out to Bailey. Frankie Candles. Oh my God, Hold Me prop firm. Shout out to Fud Rector. Says, you're the man, Frankie. Thanks for all the knowledge over the past years. It's helped me so much. Yeah, shout out to Fud Rector. Yeah, it's like one of my favorite things in the Discord is to see people like, hey man, thanks. Didn't even take one of your setups, but I saw my own level. I learned how you trade, saw your confirmations at my level, took the trade, used your risk management plan. Not that I have a special one, right? I just follow a basic risk management plan. I took profit, I moved my stop loss to break even, and I'm up. Thank you. That's what I want to see in my Discord is traders growing, right? We give the spoon-fed trade setups. It's not a signals group. I actually want to show you guys how I trade. You can learn how I trade and then actually make money, right? That way, one day, I don't think I'll probably be doing this till I'm 80. We'll be trading like alien I don't know. We'll be trading like alien derivatives. But one day, if I'm not there, right, like what do you do if someone closes down the Discord? Then you're just totally screwed. You're like, man, then you're going to be thinking, man, I wish he would have taught me how to trade so I can continue to do this. Shout out to BTC Bill. Thank you for the super chat. Said, Frankie, thanks for what you do. Had to touch grass. Good to be back. Shout out to BTC Bill. Thank you so much, bro. $100 super chat. Let's go, baby. Thank you so much. BTC Bill is super generous to the channel. We appreciate you. He gives memberships all the time, not only supporting the channel, but supporting the Mafia there. We're happy to have you, bro. Thank you for your continued generosity. Hopefully it's because we help you make money. I think it might be. Let's see. How do you draw high volume nodes? Shout out to Charlie. Check out the beginner series. I teach you exactly how to find everything in detail. It's like a free beginner trading course. Watch that whole tutorial playlist. Watch the videos 3 times. It'll show you. I talk about it so much. I don't want to be super repetitive on these live streams, but go check it out. It's all for free on the YouTube channel. Shout out to Quick, said, can you do intraday TA and talk about what's happening soon? Yeah, we did that in the beginning of the stream. If you scrub back, I'll pull up the levels for you here. Right? Broke above the resistance. Next major target going to be around 70,000 to 70,200. Going lower time frame here. Come on. Yeah, a little bit of a 15-minute bear div there, but again, not super clean. It's kind of 1 hour, right? 1 hour red dot confirmed. 2 hour red dot looking to print. Money flow coming into the green. 3 hour VWAP pretty overextended here. So I do think, again, there's the liquidity. If this ends up being like a big wick, right? And if this ends up being like a big wick, right? And you start closing down below the golden pocket, right? Well, then maybe we can see a little bit of a liquidity sweep. Key levels of support right now, in my opinion, $66,000 value area high. If we do lose the point of control, this is going to be an extremely key level to hold for a potential continuation up. So I'll just give you these levels, right? Value area low, 66,359. And let me just see how much this changes if I extend this to current price action. 65.7. So again, you can look at both of these ranges. But around $66,000 is the value area low. POC sits at $68,000 almost perfectly, and then the value area high here at about $70,200. So if we hold above the golden pocket, 786 could be next. And again, we're still kind of hovering above all this support. So it's a little bit hard for me, especially within the profile here, to take an aggressive entry on that. I'd be more willing to be a little bit late to. 4 hour candle confirmed above that anchored VWAP. We'll see if that daily candle, right? 3 hour, still got an hour left here, right? So if this ends up being like a big wick, yeah, you would have the SFP, right? Where's your liquidity, right? Like, well, here's your wicks. Whoops. Relative, yeah. Could even pull that up here. All right, well, there it is, right? If you can get the confirmation here, it would be a higher time frame SFP, but it could be something I'd rather be a little bit late to than early, right, for the previously mentioned reasons, right? You're above major support, but if this winds up confirming down here, right, even if the candle confirms below this wick, that is technically a swing failure pattern, right? You have the liquidity above, right? You sweep it out and then close your candle back down below the SFP level, right? So that could be, if we can get that candle closure, right, potential swing failure pattern. I would like to see at least a break of the golden pocket, though. At that point, right, your hope is to lose the POC, right? If you don't lose the POC, just understand something like that can happen. I prefer to see shorts at the highs, right? Like, you're not always going to get the perfect setup. Like, if you look here, this is a little bit cleaner. Come on down to like a 1 hour time frame. You push into the value area high. This is overvalued price action. This is where you look for shorts. This is where you look for shorts. Deviate below, this is cheap. Right, that's where you look for longs. This is where you look for the longs, right? For the mean reversion, back to the POC, break above the POC, go to the high, break above the high. You have beautiful bearish divergences up here, higher highs, lower highs, right? Money flow continues out. You get back into the range, back to the POC. Eventually, you make it down to that low, right? The rotation of these volume profiles is very high probability. That's why last night in the Discord, flip 66,000, right, or 66.3, right, next likely stop is going to be that next target. But you don't always have to snipe that, at the end of the day. If this is going to be a rejection of the golden pocket, right, even if you started down here at that first level, if you're looking at that as your key resistance, right, even if you have a bigger stop loss here, if you reject that golden pocket and you wind up losing the range, right, that could be a lower high, right? The invalidation for the lower high and the lower low is the break above the 786, right? So even here, right, you'd be looking to take out really this low. So that risk reward is still not that bad, right? So I would not mind if I get a little bit of a later entry to that, if I decide to take it, right? So there you go. A little bit of sauce for the mafia. Shout out to NS says Sicilian, so you're not really Italian. Hey, I'm just kidding. JK, my grandmother was Northern Italian. If you know, you know. Yes, I do know. My Northern Italian friends used to always say the same thing. I have not been to Italy yet. I do plan, but apparently, if you go to Italy, they don't like Sicilians there, which is crazy. I don't know. I didn't pick what I was. I just came out this way. Can you explain a bit with a good example how adding margin to a position is done properly? Shout out to Dennis. For me, right, I'll just use this move for an example. Anytime I add to a position, right, again, there's no real, at the end of the day, guys, there's no real right or wrong way to do this. People trade all different ways. Most people lose money trading all different ways, right? People lose money trading volume profiles, even though it's super high probability. People lose money trading patterns. People lose money trading order flow. People make money trading all those different things, right? I have my preferences of what I like to look at for very specific reasons. I like volume profiles because it's actually what price is doing. I like order flow because that is literally what is creating the candles, not just some arbitrary pattern. But at the end of the day, people can make money trading FOMO, right? Probably a lot less. But for me personally, right, like if I'm getting a move to the upside, all right, let's say there's your level, you get the bounce, you're in a long position. If you wanted to add margin, right, or just add to the position, for me, right, I would want to identify that the continuation up is likely, right, which I typically use money flow for, which I haven't really talked about the money flow today, so we'll talk about that in a minute. But essentially what I would want to do is find where the higher low is going to be, right, or where it's likely to be. And then let's just say in this volume profile, this didn't happen, but let's say here, right? If you take this long position and you want to add margin, right? You take the long down here, you get back into the volume profile, maybe you hit a TP1, right? Let's just, for this example, say you don't take profit. You're looking for the full fill of the volume profile, but let's just say everything looks good. You're expecting the full fill. Once you come down, you want to find the key level that's likely to hold the higher low, right? Which is oftentimes a golden pocket 786. I'm not saying this was the situation here, but let's just say everything was looking really good. You weren't in a low probability environment, and you are going to be expecting a higher low and a higher high. What you could do is take the long, you're in profit, you come back down to your golden pocket 786, right? This is the area where I would personally be looking for the higher low before a higher high comes in. Technically, you got the higher high here, but again, I'm just using this price action as an example. You want to identify, right? Like, is your money flow coming up? I guess this isn't a horrible situation or a horrible example because you technically did get the higher high here. But what are you saying to yourself, right? Not that I did add to this position. I did take the long, but I did not add to the position. All right, you got the bull dips at the low. You take the entry, right? Let's just say your target was, the value area high, right? For example, we'll pretend it went to the value area high. Price comes up, you reject the POC, but what is happening here on this rejection? Your money flow is coming up. Money flow indicates the overall trend. When money flow is coming up, it does not indicate the pullbacks. It indicates that those pullbacks are likely to be higher lows before higher highs come in. So not all pullback is treated equal, right? If money flow is coming out, you might be looking for a lower high here for a continuation down, right? But money flow is coming up. So the overall anticipation there would be, hey, if we come down, I'm going to look for a higher low and a higher high, which technically you did get, right? So I would always be looking at these areas like, hey, I think we're going to hold this. It's the value area low, the golden pocket. I'm going to go ahead and add a little bit to that position for a new high to be made. I've identified that a new high is likely, and I've identified the area where that's likely to come in. Again, oftentimes a golden pocket 786. Of course, it's not always going to be that simple, right? Sometimes, of course, you can hold, you might have this level down here, but there's no guarantee it's going to get hit, right? Maybe you hold a local Fibonacci retracement. But in my opinion, right, the big levels that I would be looking at is the full move from the swing low to the swing high. Sometimes you could hold a local one, right? So maybe you put the higher low in here and you go higher and you don't get filled on your additional orders down there. But that's totally fine, right? You're still holding a portion of the long. So there you go. That's what I would say. All right, Bitcoin getting a little bit of a pullback here. Where's that golden pocket? Pushing back into the GP. 7-minute money flow coming out. 2-hour red dot looking to print. Potential, if we get that 2-hour red dot, 7-minute money flow continues out here. Could indicate continuation of the local trend, right? Major target there would probably, big key level down there would be the POC and the weekly naked point of control. If you obviously have to lose that golden pocket first. Let me see here. Let me see something. If we look at this just from the golden pocket perspective, I don't know why I pulled it again. There's your resistance, right? This is the level we looked at yesterday, interested in a rejection. Why do I not take the short as we push into the first level, right? Saw the shorts coming in, adding fuel to the upside. We also had our liquidity sitting up there, right? Break above this, probably going to be a big sweep, right? But sometimes you're not going to get the perfect SFP up there. Again, everything's contextual, right? You're above all the support. You could take a shot up there. Maybe you get the SFP and you get a nice little sniper entry. But again, if you hold that support, I wouldn't be surprised to get stopped out. And me personally, right, like I'll take a position like that because I'm okay getting stopped out. I was also talking to Tony D about this today. It's, for me personally, right, down here, of course, as I showed, right, we have the long setups in there. Right, looking for bull divs in the golden pocket 786 area. I was not personally interested in this zone because of a lack of confluence. That's a decision that I've made in my plan. Still a valid long setup, right? Because at the end of the day, you hold that 786, technically that higher high is in store, right? Low, high, higher low, higher high. But when it comes to your personal plan, you have to trade your own personal plan. This is why I share setups that I don't always take, right? Because my personal situation or my personal plan is not going to be the same as someone else's plan. You have to do your own research. You have to have your own trading plan, right? You can never just follow someone one-to-one, right? Like, why didn't I take this? I was not interested in this based off the confluence. But if I were to be, I would want to see bullish divergences into that golden pocket 786 zone. And for me, right, I'm okay. I have my trading psychology in check. I've worked years to get to the point where I'm at right now to deal with my psychology and handle it the way I do, right? But not everybody's in that situation, right? So, like, if I miss that move, it's like, it's okay. I'll just look for another setup on a retracement or something like that. I'll catch another trade. I'm not worried about it, right? But you come into the 786, you get the bullish divergences. Right? I'll draw out the box. And again, this is why I pay attention to this, because I can't say just because I'm not interested in this personally, or I'm okay. I don't care about missing this. It literally does nothing to me. But it's still a valid long setup, right? Like I'm not gonna take every single position, right? There's setup every minute, every hour, right? But if I looked at every setup ever forming on the 1 minute chart, right? Like it would be impossible to manage, right? So you have to have your own plan. My plan was to hopefully get a move down to 60K. If that doesn't happen, I'm okay missing this long. I just don't mind. But what happens, right? You get the move down. Right? At the end of the day, 786 is a key level of support. You get lower lows, you get higher lows. There's the bullish divergence. And I'm not saying that it has to play out for a new high, but there's the setup. It's a valid setup, right? But again, This doesn't, I just don't care, right? I'm not interested in this. I've made my decision. I've seen things play out so many times where the value area low gets hit, so I'm just less interested. There's not a ton of confluence. If I miss the move, I understand that's just part of my plan. But that's what shakes people up psychologically, right? I can handle that stuff. Again, I wasn't always able to handle that stuff. Probably 6 years ago, I'm like, oh my God, my life is over. But I look back now and I'm like, that's silly, right? Literally doesn't matter. This is not the only long. This was not the only short. This was not the only short, right? People who miss the short from not, if I miss, we actually took this long, but let's just say I missed this long, right? I wouldn't care because I could catch the short, right? And I did. We actually caught both. But I know there's probably a lot of people out there from a spot bag perspective, and again, guys, zoom out, right? Zoom out. It's all right. It's all right. But, probably a lot of people here feeling FOMO, probably a lot of people here thinking, oh, my God, I missed the bottom. And listen, like maybe you didn't buy the tick bottom, right? Maybe you're not in a long position. That is what it is, right? That is still a real thing. Kind of sucks, right? But that is not going to stop you from making money, right? I'm trying to remember like the last time I missed like some kind of a significant move. I always point to this scenario. Right? Because I know this is probably directly relating to a lot of people in the chat. They're like, yeah, man, I do feel that. But just to show this, right? Down here, I wanted to see this low swept. More often than not, you'll sweep it. Not 100% of the time. We front ran it. I missed this long. Oh my God, you never made any money ever again? No. That's not what happened. I waited for a pullback. And I caught the long. Actually, I think it was a more local. I don't want to go super, super in-depth here, but we caught a long locally on a retracement. I don't remember exactly what retracement it was. It might have been this one, maybe. Yeah, I think it was this one. I waited for the pullback into the golden pocket. I took the long, right? And even if I didn't catch it here, right? You can catch it here. You can catch it here, right? Or you can catch the short, right? I don't look back to this and be like, oh my God, I missed the bottom, right? Still was able to catch that long on a higher time frame for the massive new all-time high, right? Let's see. Shout out to Bullish Sauce. Thank you for the super chat. Said Frankie is the top G of candles. Shout out to Bullish Sauce. I want to get some do we have any sculpture artists in the chat? I would love to buy some candle sculptures. Like a big green candle, a big red candle, or a big blue candle, a big purple candle. That'd be sick. Like props. Any artists in the chat that can get that done, let us know. But shout out to Bullish Sauce. I appreciate you, brother. We're getting out of the matrix. Trading will take you out of the matrix, guys. Don't be a slave to your job. Make money on the charts. Shout out to Bullish Sauce. And shout out to Top G. Where is Top G? Top G comes in here sometimes. He hasn't been in here in a while. You can make them out of glass? I'll be honest. I can't be trusted with glass. I spill coffee on my keyboard 6 times a week. I can't be trusted with glass, but that would be cool. That would be cool. I would want to put those in my house. I like sculptures. I like sculpture art, like pop art, like giant bear, like 6-foot bear bricks and stuff. I want to get some for my house. Those are dope. Or they have a lot of pop art, 6-foot astronaut sculptures, bull sculptures. They're sick. We're also getting out of the matrix. Shout out to Bullish Sauce. Absolutely, bro. We're going to skirt that matrix as best as we can. 3D print them. Actually, that is true. Tony D is like a 3D printing. Tony might be one of the highest qualified 3D printing experts, probably out there. I'm not even lying. He's an electromechanical engineer, and he's specifically worked deep in 3D printing. At Tony D, can you make us big candles? Make them square. Don't make them round, please. We don't need any green dillies. We want green candles. Hey, Frank, I hope you're doing great. What do you think the best indicators or confirmations for trends? Just EMAs or maybe something else? Because money flow, not really good for day trades, or am I looking wrong? Shout out to your comrade. No, I would say I would 100% recommend money flow for any type of trading, scalping, anything, right? You take money flow to any time frame. I would personally pick. I can't say it's the best, right? Like, I don't think there is a best or worst, right? Like it's really what you like, right? Or like what kind of like clicks with your own kind of style, right? Like maybe some people don't like looking at volume profiles. That's fine. That doesn't mean they're not going to make money trading. That just means they're not going to make money trading volume profiles. And again, order flow and volume profiles, I would argue like even almost factually is like one of the highest profitable strategies you can use, because again, it's all based off what the market has actually done and what the market is actually doing, right? The volume profiles marks out the high volume nodes, the low volume nodes, where the volume is actually transacted in the market. It's not a magic level. It's not a magic pattern that the chart has no idea about. It is literally price, right? And then the order flow is literally what creates the candles, right? When you see those orders coming in on an order flow chart, that is what is creating the candle, right? It's literally the X-ray vision into the market is what I call it, right? So the money flow, in my opinion, right, is but you can't just trade money flow, of course. I think everybody just wants to see, like, if the money flow crosses over, I want it to guarantee the trend is going to continue up. That is never going to be the case with any indicator, right, or any kind of strategy either, right? Like, you could see, I guess this worked out technically. You get the money flow crossover here. The trend does continue up on the 3-minute, right? I'll try to find an area where it fakes out, right? Like everything is going to fake out sometimes. There's nothing that's going to give you a guarantee. That's why the risk management is so important. If you're looking, and shout out to Conrad, I don't think you're looking for this, but if you're looking for something that's just going to give you a guaranteed, this is definitely going to, like, everyone's searching for that thing that's going to make trading click for them, something that's going to make trading not put them in a situation where they're not going to have to make difficult decisions that aren't 100% certain. That does not exist regardless of the tools you're using. I've used every tool. I've landed on the ones that are the highest probability for me, and honestly the highest probability kind of overall, right? Again, what did I land on? I landed on the thing that is actual price, which is volume. So there's nothing that's going to have that aha moment for you. The thing that's going to give you that aha moment is an extended period of time of sticking to your plan and following risk management. That is not going to give you an aha moment where your P&L goes like this. Right? It's going to give you an aha moment of understanding that if you start at zero and you lose money consistently, maybe you lose 2 or 3 trades in a row, and then you start winning, right? And then you start losing. The aha moment is sticking through that difficult part, right? Oh my God, now I've just been flat. Now I'm losing money again, right? And then sticking through that difficult part and then having another losing month. It's not until you zoom out where you're like, oh my God, it was really hard to stick to that risk management plan. But until enough time goes by to see the edge play out, because no edge is going to give you 100% certainty. It's not until you zoom out. That's the aha moment is, oh my God, the hard thing was the aha moment, right? Sticking through the hard thing and just sticking through the plan. I said this yesterday. Trading is a rare situation, a rare skill where if you are losing on paper, you could still be winning, right? You could still be doing the right thing while losing money. That is like a huge wall that people hit psychologically. They're like, well, my strategy obviously doesn't work. I've been trading for a month and my P&L is going down, or I've been trading for a week and my P&L is going down. I'm trading and I'm losing money, right? That doesn't necessarily mean that you're failing, right? That could mean that your edge, you got stopped out of a few trades. No edge is going to give you 100% certainty with an absolute exploding P&L. You're going to catch trades. Sometimes your P&L is going to get a big pop up, sure, right? But just because your P&L does this for a little bit does not mean your strategy doesn't work. It doesn't mean that you're missing that magic signal. It just means that this happens sometimes. Sometimes you're in a low probability environment. Sometimes these 3 trades that you lose were perfect setups and they just don't play out. That is the law of probabilities, right? Even at 80%, right, you're going to have a losing streak, right? That's one of the hardest things. But if you follow your plan, the key here is that you take small losses and your P&L is not getting wrecked, right? That is the aha moment, right? And then that takes a lot of time to let play out. So I would say money flow to answer that kind of long-winded question, right? That would be, I'm trying to find a place where it like totally fakes you out. Like here, money flow crossover into the green, continuation of the trend, right? Like right here. Here you go. Money flow crosses green right here, right? Technically on the 3-minute time frame, you'd be looking for higher lows and higher highs. What happens? Lower high, lower lows. Does that mean money flow doesn't work? You should stop using it? Absolutely not, right? Does this mean that you should get wrecked on this trade? Absolutely not, right? Let's say you were looking for a little scalp here. Oh, nice, right? This looks perfect. This looks absolutely beautiful. Right? Oh, my God, right? I'll come into bar replay mode to make it like 1-to-1 what it would look like in real time. right? I think this is what a lot of people are hunting. Oh my God, money flow crossover. Here's the higher low. I'm going to take the long. Whatever. Stop loss below the low. I'm targeting a new high, right? Beautiful setup, right? Oh my God. And again, I I don't know the exact confirmations I'd be looking for in here. Again, just kind of doing it from a higher low, higher high perspective. Money flows crossing green. I'm anticipating the pullback to give me a higher low and a higher high. I take the entry. Oh my God, this is beautiful. I'm a genius. Money flow is magic. Oh my God. Change your strategy, change your indicator? No, right? But small loss, right? So you could use whatever you want. You could use market structure. You could use a million different things, right? But I would still use money flow. Money flow is good on all time frames, but at times it will be very choppy, right? We've talked about that on the medium time frames recently. You know, we've been in a pretty weird, difficult situation because the money flow is very chopped up, right? Let's take a look at the 1 hour. Right, up in this range, right? Like, look at this money flow. It's like, oh my God, higher low, higher high. Oh my God, right? But bing bong, right? Just super, super choppy. That's just going to happen in a choppy environment on anything, right? All indicators are using the same information. They're just displaying it in a different way, right? Obviously, different indicators show different things, right? But like the momentum waves are going to show something very similar to the RSI, right? So, you know, money flow is going to get choppy in a choppy environment. But again, there's ways to not get around that. I would say here, like, things were just super, super choppy. But you can use things like your volume profile to understand that you deviated above the highs, you're back inside value, high probability target of the POC, and eventually filling to the value area low, right? That 30-minute money flow, right, is probably not going to trump the fact that we're inside the profile. And, you know, maybe you have higher time frame money flow crossing into the red as well, which you did, right? 1 hour money flow is very clearly trending out, right? So you can't use one thing alone. You have to, there's no way to get around having a full understanding of the market. Context is very important. So hopefully that helps you out. Let's see. Shout out to Fran Gonza. Says, Frankie, I was out of for a work trip for almost 23 days, and it was impossible for me to be on the charts. It was a nice breather, but now I feel so lost. How is the market looking? Shout out to Gonza. Well, scrub back to the beginning of the stream. Watch the entire stream. I kind of get my thought process here. And, of course, tune in. We're here every day. So keep my eye on the chart for you. Thanks for being here, bro. 23-day work trip's kind of wild. What do? That's like a I don't know. I used to work in TV back in the day, and it's like they used to be like, hey, do you want to go to like Arkansas for a month and a half to go film a show? Like, dang, not really. Yeah, shout out to Perry, said money flow is the best trading indicator that you can have. I personally agree with that. I can't say it's the best. For me, I would say it's the best. Shout out to Erica in the chat. What is going on? I didn't even realize you were the one that said 3D print them. And Bullish Sauce, welcome to the muscle. Thank you for getting that membership. I appreciate you, brother. What's going on, Erica? Welcome in. Let's see. Rocket fuel coming next, and video will be the catalyst. We shall see. No silver bullet in trading. Shout out to Darren. Yeah, absolutely. I think that's why most people fail, right? Everyone's looking for the magic bullet, the thing that's going to make it easy, the things that's going to make it the aha moment, looking for the clicking aha moment. For me, it was not what I thought it was. To get good at anything, guys, especially in trading, because you have the crazy psychological aspect of it. It's like one of the most emotionally and psychologically taxing things you can do. I saw some like biology guy talking about like the actual effects on the human brain when people are trading, and it's actually like really not good. It's like staring at the 1 minute chart all the time is like really not good for your brain, which is crazy. I'm cooked, guys. I'm cooked. But Trading ended up being much harder and taking much longer than I ever expected it to. It turned out to be the single best decision I ever made in my life, to not stop trying and not giving up, right? And not just not giving up and doing the same thing, but actually separating myself emotionally from the money and just focusing on following the plan and executing the strategy with good risk management, right? I had to accept that I don't care if I make money in the next year or two. I just want to focus on executing the plan. If I put my all in for the next 2 years with no expectation of return, maybe the money will just come. And that ended up being the case, and it didn't take 2 years. So, but it did end up taking a lot longer than I initially thought, right? I thought I was going to get in and instantly start making $1 billion a week because I thought there was going to be a buy and sell indicator. I've tried them all. I even tried buying and selling on red and green dots. I know it looks good in hindsight. It does not work in practice. If it did, we would just code a bot for it, and I would just like go lay on a beach forever. I probably wouldn't because that'd be super boring for me. All right, let's see. Oh, we had a huge Hunters Expo in the USA in 3 different states. So a lot of traveling. What's the name of that? Is it like hunting and fishing type hunting? Or is it head hunting? It's actually funny. My dad just went to a huge show like that like a couple weeks ago, I think. And he said it was gigantic. It'd be crazy if it was the same thing. You might have walked past The Godfather without even knowing it. You might have talked to him. Was he wearing like gold chains and like a Rolex? Because he did sell the top on Bitcoin. It's you and yourself against the market. Sometimes someone can change sides. Shout out to Crypto Gardenist. The epiphany is the greatest moment. Shout out to Tony Roaz. Yeah, it's the epiphany is not what you think it is. I'll tell you that. If I had to give like it's not a silver bullet, right? Even order flow is not going to be a silver bullet. But like, you know, again, if someone comes in here and they're like, I just started trading this week, what's price going to do? Tell me where I should short. You can't. It's not something you can do. You like trading is one of those things that you have to just get your hands dirty and experience it, right? Because that's where you're going to fall on your face and make mistakes. If you don't fall on your face and make the mistakes yourself, you're not going to be able to identify them and fix them, right? You know, I could tell people till I'm blue in the face. This is what the aha moment is. Most people are not just, you know, I could tell you take partial profits, don't FOMO in, right? But no one can force you to click the button or not click the button, right? You have to click the button when you're not supposed to click the button to touch the hot stove and then eventually learn through practice, right? I could teach you the strategies. I could teach you the TA. I could teach you how to find the key levels. I can't teach you how to not be afraid to pull the trigger when you see a setup. I can't teach you to not take a trade when you're not supposed to, right? Pushing into our major key level here, it takes discipline to not fire on that short because I see all the shorts coming in aggressively, right? And anticipating another move up, right? I say to myself, hey, this is probably going to squeeze. I'm not going to take my short. That takes emotional discipline not to do, especially if you get a little pullback, right? That's something that can't be taught. It has to be done, right? It has to be learned through experience. You could teach somebody the perfect way to shoot a basketball. You could teach somebody the perfect way to shoot a bow and arrow, but you can only stay in the books for so long, right? If someone tells you, hey, when you shoot a basketball, use your form like this, whatever it is, right? You could know that as much as you can possibly know it. But if you get on the basketball court and you just start hook shotting it, right, like you're probably not going to hit your free throws. So it's the same thing with trading. Yo, shout out to Poppy22 said, Frankie, we don't mention the head hunting on live on YouTube. Yeah. We might be the CandleMafia, but you never know what else we're into. I'm just kidding. It's a joke. It's a joke, guys. All right, let's see here. Let's come in locally. Holding the golden pocket currently. Let's get a local golden pocket on here. Just tapped into the local golden pocket. Money flow coming out on the 5-minute. What's our 80-minute looking like? Red dot printing. 80-minute money flow coming up as well. Again, I just mentioned this before, but I have been mentioning this a lot. Money flow is a little difficult in these choppy situations. It was kind of similar up here, right? Like money flow is in a very difficult, choppy situation. But at the end of the day, you do have your 80-minute money flow coming up. You do have your daily green dot printing. Now, here's the thing, guys. If we had a clean bullish divergence here, I'd be like loving this. I'd be loving this move up and the continuation. We just technically don't really have it unless you measure it from the bodies to the wick. I personally don't. But you got the green dot printing. Your momentum is coming up. You have the 80-minute money flow looking to cross over into the green. Again, it doesn't mean you can't pull back. But again, that could, 90-minute money flow starting to cross over as well, right? So from that aspect, daily green dot 90-minute money flow crossover, market cipher B 1/16 bullish setup would make you overall anticipate potential higher lows and higher highs. Definitely overbought here on the lower time frames, though. Yeah, you got a little, not really a super clean bearish divergence here. You got a 15-minute green dot looking to print. 4-hour green dot still a little overextended. So maybe we kind of cause a little, start to create a little bit of a range here, right? Get some structure. Let the indicators kind of get a breather. But let's see here. Just to do some 5-minute TA. So again, although 80-minute money flow is coming up, that red dot is printing. Right, so again, time frames matter, right? 80-minute red dot with the 5-minute money flow crossover. This money flow crosses over into the red. You could see a continuation of the downtrend. Obviously, we're still a little bit far away for that to happen. I would personally like to see what this 15-minute green dot does. But that would not step on the idea, right? If you get that 5-minute money flow crossover, and let's just say you get a continuation of the downtrend, right? That does not change the fact that that 80-minute red dot might just be a small pullback, right? Shifting up in the time frames, red dot, money flow coming up, right? That money flow crosses green. That 5-minute money flow crossover might just be a little pullback before a higher low and a higher high. Doesn't mean you can't short that. Not telling you to short it, but just trying to show the separation between the different time frames. So let's see here. Yeah, it's actually kind of crazy because shorts have been super aggressive on this entire move up. Super aggressive. Like this entire move up, shorts were just funneling in. Longs were all probably taking profit. Yeah, a lot of longs taking profit up in the 68K. Yeah, $68,000. We had a lot of longs. Looks like a lot of longs taking profit there, while the shorts continue to just funnel in. And now longs are just starting to pop up now on this pullback, right? So we did have a lot of longs enter there as well, which makes sense, right? Because that 68K level, not just for me, right, but for a lot of people, that's a big level, right? So it makes sense that a lot of longs were taking profit there, especially in a bearish environment. And then shorts just continuing to be mad. Short. And then on this pullback, we do see, some aggressive longs coming in. Still more shorts, though. So we'll see. We can watch this 5-minute money flow for a while. Come back into chat. Shout out to Brillo, said inverse head and shoulders technical target at the value area high. Interesting. Wow, that is actually kind of crazy. There you go. So again, if we do get a pullback, something like that would not be out of the cards. 3-minute money flow trying to cross over. I think that 45-minute red dot is confirmed. Yeah. So no confluence there. So we'll say we'll see. I'll say the most important level locally would be the $68,000 zone. Lose that, I'd be looking down to about 66. See where that 786 is living. Come on. So key level number 1 going to be about 68K, weekly MPOC point of control retest if we do get the pullback before the value area high. That'd be the first place to look for a bounce for me personally. And then once we lose that POC, next key level for me would be sitting down here between 66,840 and 66,889. So, of course, all confluent with the fib levels and the volume profile levels. And we'll see. Those will be the levels I'm watching. Maybe we could shoot up to that value area high sooner than later. We'll have to see if we can get above this. Invalidation for the lower high here would be the 786 at 69,356. So we'll see. We could try to take a look at some altcoins as well. I'll put an alert here in case we break that. Taking a push an alert here. Boom. Let's take a look at some altcoins. Let's see. Let's take a look at Ethereum real quick. Ethereum also, same thing as Bitcoin. Holding the 786, which of course was that major key level. If Bitcoin lost at 786, 60K was the likely to take out the low, right? Take out that 60K low. Same thing on Ethereum. 786 was that key level to hold. Low, high, higher low, potentially a higher high. Next target to the upside for me personally on Ethereum, I could pull this profile. Oh, you're at the value area high. Let's pull it to here. Yeah, so you're playing around with the value area high right now locally, but if you could break out here, I would say the next target still remains the same as what we've been looking at, sitting between 2188 and 2318. Like literally the exact same price action as Bitcoin. Bull divs into the 786, getting the bounce, right? If we get the higher high, this is the next level to look at. Money flow on the 1 hour crossing into the green. 16-hour green dot confirmed. No confirmation there. Yeah, still no real, not a real bull div there, but you do have the daily green dot with your 90-minute money flow crossing into the green, right? So that could, same sentiment as Bitcoin, right? That 90-minute money flow stays in the green. 80-minute stays in the green. We could look for pullbacks, higher lows and higher highs. Here's your local profile. Trying to hold that value area high. Let me just hide this. Right, and again, high probability rotations. Again, volume profiles don't always have to be entered at the low, right? You could look for the flip of the value area low for the high probability fill to the value area high, right? You get in there. Flip the value area low to support, money flow coming up, POC is next, little rejection, get above there, value area high next. And let me just, I wanted to draw this so I can see how much this changes. Not really. I will take this. Oh, there we go. Bitcoin getting the move. Let's just check this real quick. Into the 786. 15-minute green dot probably printing now. There it is. Money flow cruising to the upside here on the 15-minute. So we'll see. That's the line in the sand to crack this high. Break above the 786. I'd be looking for the high. Reject it. Could be continuing lower. But back to Ethereum here real quick. Try to find some key areas of support if we do get a cool off. For the daily MPOCs, we just make sure we don't have any new ones. Okay. Whoops. Let's pull an anchored VWAP from the low. Yeah, so POC similar to Bitcoin, right? That POC, not on your full fib. So I would say biggest areas. I would just look at this as a volume profile, to be honest. Golden pocket value area low is key support, right? And then that 786, new 786 at 1862 would be the line in the sand to come take out a new low, or take out this low to make a new low. But I would probably focus on this more concentrated, and then pull from the impulse to the high. This anchored VWAP's going to move, but POC zone does sit here. So these would be like two big zones to look at on Ethereum if you do get a big pullback. I don't really see any kind of, maybe get a 15-minute bear div here, potentially, with the green dot printing. Let me just pull this. Yeah, that's, I guess, really the big impulse. Still the same level. But, yeah, these would be the big levels to look at, in my opinion, if you get the correction on ETH, right? And, again, if that 80 and 90-minute money flow is going to cross into the green, could look back in. I'd be more, POC with money flow coming up. I don't know if that money flow is going to stay in the green if you came down from here, but that could be an area to look for a higher low. Again, I don't love taking trades in the middle of the range, so you got to be careful around that value area high, of course. But these would be the supports that I would look at as far as Ethereum. First zone sits between 1977 and 1946, and then the next zone sits between 1923 and 1898. 1898 was a great year. That was the year I was born. Let's see. Hope more correction on ETH, please. But again, right, from a, I don't know, shout out to, I forget who said it. George. Again, right, like from a spot bag perspective, again, I'm not telling you to buy Ethereum. I'm not telling you what to do. I'm not a financial advisor. But again, I would recommend, I think a lot of people, right, will see this as like, I'm not going to buy ETH. I'm going to wait for the pullback. From a spot perspective, right, you are not FOMOing in at the top here. Right, as far as a spot bag, in my opinion, right? You have to have a long-term outlook, and again, I don't know if you're talking about for a retracement for a leverage long, but just for anyone out there looking from like a spot bag perspective, just understand that like FOMOing in here is buying the top. FOMOing in here is buying the top. FOMOing in here is buying the top. FOMOing in here is buying the top, right? Right here, are in a massive weekly downtrend, right? We're on the 2-day chart, but obviously a massive weekly downtrend. This, FOMOing in on this tiny little candle is not, in my opinion, FOMOing in at the top. All right, if you're looking at this as range trades, right, on a day trading perspective, I would not be looking for longs here, right? Not saying it can't continue up, but I would just never long the top of that green candle from a lower time frame perspective. From a spot perspective, right, zoom to the weekly, right? You're not buying the top here. Right, this is, and I'm not saying to buy ETH or anything like that. Again, not financial advice, but like bring it back to Bitcoin. It's like you have to think, are you worried about buying here instead of here? is that going to make a significant difference for your long-term plan, right? So you want to make sure you separate your long-term plans from your short-term plans, right? I separate my trading from my investing completely, right? I look at them totally different, right? I would be, for example, full disclosure, I did not just buy Ethereum right now, but I would be I would not be interested in taking a leverage long right here. I would be interested in buying Ethereum down here, right? I don't care. This little move up does not change the fact that if I were dollar cost averaging into Ethereum, I'd be buying. Maybe you wind up ranging around, right? And again, I'm not saying that this is going to be 100% the bottom or anything like that, but I'm just not worried about buying here or here if I'm looking for a much bigger move up long term. So just make sure, you got to separate that stuff, of course, because then you'll wind up in a situation where you're like, oh my God, I don't want to buy. Oh my God, I don't want to buy. I don't want to buy. I don't want to buy. And then like, oh, it'll go lower. And then eventually you wind up buying on your way up. Again, I'm not saying it's going to be the exact situation here, but just from like a theory perspective, right? Like I would, people I think sometimes will get confused as like, you would never buy the top of that green candle. If I said I bought a bunch of Ethereum here, right? That'd be a totally different story than when I say I don't long tops, right? I don't ever really call my spot bags longs. Technically they're longs, but hopefully that makes sense. Spot. Yeah. So like, for a spot again, put yourself in the situation. Again, I'm not saying that if you don't buy here, you're not going to go lower, right? Like you could totally go lower, of course. But just like, again, from like a theory perspective, you want to understand that like hypothetically, if the bottom was in on Ethereum, right? Whatever, we'll just pretend it's Bitcoin, right? Hypothetically, if the bottom was in on Bitcoin here, let's go current price action. Are you going to care that you bought, I waited for it to go lower? Right? Again, that's why dollar cost averaging is the best thing to do in my opinion, right? The kind of caveat there is you're going to have to sometimes anticipate your bag is probably going to be red. When I dollar cost average, I don't expect to buy it and see it instantly go into profit. That's more of like a leverage trading, day trading perspective for me. But like if I were interested in buy, or this is Bitcoin, right? Like for a long-term perspective, I don't care if I get in here or even here, right? I'm just happy that I didn't buy in there or there, right? So just some food for thought, or sauce for thought, I should say. DCA into the projects you believe in. And again, have a long-term mindset, right? Like I have a long-term mindset on Bitcoin. When I dollar cost averaged in here, I wasn't like, oh my God, I bought the top. I just bought more, right? And I actually just had bots going where I just bought. I didn't buy in here and go, oh my God, I'm losing money. I'm just buying it because I believe that 15 to 24K was a good place to start buying because I believed in the next 5 to 10 years that Bitcoin's going to be way higher than 15K. I wound up being obviously correct. Even if we went lower, right? Long-term perspective. So again, you got to separate that stuff. All right. Let's see here. Did you just say you were born in 1998? Tell me I heard that wrong. Shout out to Bullish on Parade. No, I was born in 1898. You did hear that wrong. Actually, every time I ask the Mafia how old they think I am, they get it like within a couple years. I guess I look pretty much my age. Usually people think I'm younger than I am, which I guess I kind of like at this point in my life. But yeah, usually the Mafia is pretty close. Are we selling Bitcoin now? No. Not my spot Bitcoin, right? I do still hold a portion of my spot Bitcoin, small portion that I'll probably won't sell for the next 20 years. But I sold most of my Bitcoin up here at about 108 to like 109K. 32, 34. Go ahead. How old does the Mafia think I am? Let me know in the chat. Let's see. I won't say if those are close or far. 27. Let's see what you guys think. Darren says 33. Maybe. Might be 27. Might be 32. Nobody knows. Nobody knows. I might have Benjamin Button syndrome. Might be 84. 18. I'll take that. I'll take 18. 36, 33, 15. I'll take that too. 29, 35, 40, 32, 34, 27. 27's my golden number. Tony D says 37. That's cheating, Tony. You know me. 55. Man, 55's rough. 55's rough. I feel like my beard sometimes make people think I'm 16. 41, 12, 6, 7. 6, 7. I don't even get 6, 7. Oh, man, I might have just aged myself there. I don't understand the 6, 7 meme. I'll tell you what. I'm pretty close to the average viewer age of our YouTube channel. I'll let you guys know. Not right now, though. 91, 67. All right, I'll let you guys know in a few minutes. I think a lot of people do know. We've done this a few times. 6, 7. 6, 7's in the chat. Google 6, 7 if you never have. I don't know if Google still does it, but that's how you know our society is cooked. If you Google 6, 7, just Google it. Trust me. There's an Easter egg. It's pretty wild. 6, 7. What about the time fib? What do you think is going to be a good bottom based on the time fib? I mean, the time fib never really gives you like exactly where the bottom is going to be or the top is going to be. Again, obviously we did use the time fib. Where is it? Where is it? We did use this to try to identify likely where the top would come in, which brought us to about October 20th, I believe, was the level. Where did I pull that from, actually? Let me see here. I think we pulled it from, I think it was bear market low, bull market top, bear market bottom. And that gave us a date of October 20th. Yeah, there it is, right? So that was the time fib. What these basically do, again, it's basically just another way of measuring time. But why I was looking at this, we looked at this like a while back, right? Like before we had any price action. It gave us that October 20th. So basically these time fibs, what they do is they indicate where you're likely to see a big pivot in the market, right? So like you can see you cross here at the 618, right? Big pivot up, right? Even here, like big pivot up, right? Another big pivot. Then we cross here, big pivot, right? Then October 20th, obviously, big pivot. And this was part of the analysis that we used to identify on top of like all of the, I'm going to say it, guys, a lot of the obvious signs that the top was likely in at 126K. Tons of stuff. I'm not going to cover it all. I cover it every time. Just look back at 2021. So many things were very likely looking like 126K was the top. At about 108K, we started talking about that. I sold a bunch of my Bitcoin. And, of course, that time fib was one of those additional things, right? October 20th doesn't mean that's where the top will be or that's where we're going to look for the dump. In this specific scenario, it's like, well, hey, if we're going to get a massive pivot on October 20th and then all the TA is screaming, oh, my God, bear market can be here, obviously that pivot would be anticipated to be downward, right? There's nothing about this time level that says you're going to dump. But it's really just where you're looking for the pivots. I'm sure you probably know that. But I could try to take a look at, let's see. Let me do a little bit of experimentation here. There you go, 1-to-1. This is just going to give you probably pretty similar levels to the anticipated. There's the 1-to-1. I was going to say it's just going to line up. It's again just another way to measure time. It's going to give you that same level as like what you would look at for the 4-year cycle. So that puts you in like October 2026. If you're paying attention to the traditional cycles, right? Traditional Bitcoin 4-year cycle, this is kind of what you would anticipate. 1-to-1 time fib is there. Again, it's kind of just another way of looking at the time measurement. So yeah, I mean, based off of that, it would be you'd be looking at this, right? But again, the two kind of major scenarios we've talked about is, of course, Rejected off the 786 there. Currently rejecting the 786. Red dot looking to print. Could get a little pullback there. Come on. Two scenarios that we were looking at, or are looking at, right, is, of course, let me pull up our current range. Big major zones to be looking for a bottom to form, right? Obviously, within here. Maybe you get the early bottom. I don't know. Again, I've explained this on a previous live stream. But, like, underneath us, big area down here, right? If we are going to have a situation like 2021 or 2017 where you can actually put in those bull divs into key support, right? Like, the kind of better scenario would be something like an early bottom coming in, I don't know, maybe May, maybe, again, timing's a little bit hard to call there. But from a level perspective, I know traditionally you would anticipate pretty much a drop down to 30K, right? If you're going to follow the 4-year cycles, which is what I base that time fib is based off of, giving you an October bottom, that would be following the traditional cycle with a 70-ish% correction to the downside. Probably would take a little bit longer, getting you down there somewhere in October, right? Not drawn time accurate to time here. But we also know that maybe, right, again, not this time is different, we have to go up, right? But if we start to identify that there is a bottom formed here, then it could indicate that the bottom could come in as early as, between 59 and 55K, maybe even dip down into the low 40s. Ben Cowan came into the chat yesterday and was showing us some other things that we don't look at, such as like realized price and balance price, which line up with a lot of the technical targets. But kind of the big things that we've been looking at here is, maybe an early bottom coming in more towards these levels, or, of course, lose that 47K POC, then the traditional 4-year cycle is more likely to play out. I'm not looking, right, for that traditional 4-year cycle 30K bottom until we end up losing all this major key support. And it's just a volume profile. It's the exact same thing that we looked at on the way up, right? We talked about back here, even before we approached 30K, and especially when we were approaching 40K, key resistance until proven otherwise. But after your money flow on the weekly starts turning green, right, even though you faked out, typically that first money flow crossover into the green indicates that the bottom is in, right? And then at that point, you say to yourself, that 30K level is the level to break in order to see acceptance into the range, move to the POC, and eventually the value area high and beyond, right? It's the same thing here on the way down, right? If we get another move down, if we form a bottom here and hold this, right, even if we get like a little fake out and we hold this as the high, I'll hide the current range, right? We want to hold on top of this value area high. Why? Right? Well, if we break down in here and we can't get out, and then we lose the POC, where's the next likely place for price to go? Value area low. Lose the high, go to the POC. Lose the POC, go to the low. So in order for me to call a high probability for a move down to 30K, I need to lose that 47K POC. Just like here, in order to call for the 47K POC, I had to be above the value area low. Boom. Money flow comes up. You have all the confirmations that you're looking for. Very high probability, right? At that point, I was feeling pretty good about my $21,000 entry price on Bitcoin. So get above the POC, then you can look for the value area high. Right, it's the same thing, just flipped upside down. So we don't want to see this, although this is what the 4-year cycle would call for. But I am not a stranger to the market, not just repeating history. Right, if we see a bottom come in here and look, we could see it on the charts, we'll be looking for that. Right, and then obviously you do have the option of maybe the bottom's already in, which of course is a little harder to call because you don't have the confirmations similar to 2015. Right? You don't always get beautiful confirmations. 2018 and 2022 did have beautiful bottom confirmations, but it's not always the case. Sometimes you just bottom out on the capitulation, right? And then you come up, right? Money flow stays in the red for a while, but it's essentially just an accumulation zone before continuing up, right? And in this case, to identify the bottoms in, you wait for the sign of strength, right? And then, of course, money flow coming back up on the weekly. So it's hard for me to say if I'm confident that the bottom is in right now until we see something like that, right? Maybe when the weekly money flow crosses over, maybe we can see like a bigger sign of strength. But I always prefer to have the bottom signals just because they're clearer to view. Now, again, I'm not waiting for a bottom signal to just buy a bag, right? Again, dollar cost average is the way. And then depending on, maybe we range around, who knows, right? We pulled these fractals 100 times. Like, I don't know exactly what it's going to look like because at the end of the day, it's not always, like on the weekly time frame, like of course here you get the weekly money flow crossover, you get the big low, and then money flow starts making like small lower lows. But at the end of the day, it was just to print that bullish divergence for the bottom to come in, right? Like pretty much all the pain was over at that point, right? It's pretty early in that crossover. That crossover is early. You get the big dump to the downside. That money flow kind of just indicates that last free fall, right? And then at that point, money flow stays in the red for quite some time, but it's not continuations of lower highs and lower lows. It's really just accumulation. 2014, Bitcoin was a different animal back here, but money flow crosses red, final plunge down, right? Stays in the red, which typically you're looking for lower highs and lower lows, but on the weekly specifically, it's kind of like that early money flow crossover is kind of that final little dump down. If it's not the final dump down, you just get like slight lower lows, right? Final dump down, slight lower low. So again, when I say 2026 bottom watch, it's hard for me not to be on bottom watch here, right? Because you get the crossover, big dump to the downside. This is historically where either maybe you continue down a little bit, but pretty much a majority of the bear market is over after that money flow crosses red and you get that last plunge, right? Last flush, money flows in the red, right? Like at this point, it doesn't mean you can't go lower, but it's like really where you'd be looking for that last dump to put in the bottom. If not, something similar to 2015, where that last dump was the bottom. I don't know if it's going to play out like 2015 or 2022 or 2017, right? These were more similar than 2014. But at the end of the day, one thing is for sure, 2026 bottom watch. Hashtag 2026 bottom watch. Let's see. Six seven is a demonic thing, just so you know. At least that's what the rapper intended it to be. Shout out to Bullish Sauce. That's wild. I did not know that. Yo, Dave Digital with the 6-7 emoji. Shout out to Dave Digital said, like number 246 is Dave Digital. Smash that like button, guys. Let's get 550 likes on tonight's live stream. Let's do it. I think we could do it. I know we can do it. It's happening. Shout out to Rudy. Welcome in, Rudy. Yo, the 6-7's in the chat. If we stay at these levels, should be another leg up. Looks like price is trying to break through or stabilize. Shout out to George. Depends on what time frame you're looking at. But we'll see if we can get up to that 70K level, guys. See if we can make it. Pull back up the Bybit chart here. Come on. All right. Rejecting the 786 currently. Red dot, money flow continuing out. 80-minute red dot still printing. Got about 6 minutes left on that. Again, I would look at that as of right now, with the medium time frame money flow, as a shorter term pullback. And again, bigger supports. Come on. Let me just take this off the chart. Yeah, also anchored VWAP sitting currently at 68,665 would also be local support as well. There we go. Yeah, and then once you lose that anchored VWAP, I would say looking down towards that POC at about 68K. Again, that's hyper-local. Bigger support levels, I mean, obviously POC 68K, and then down here towards the value area low. 80-minute money flow again, right? Like red dots indicate the ebbs or flows in the market, right? So maybe a little, maybe a little ebb for the overall flow. As long as this money flow can cross green. 90-minute money flow already trying it. But very simply, based off the volume profiles, next major target to the upside going to be about 70,100, 70,000 to 70,200, and then next big level of support 68,000 at the POC. Lose that, we're looking down to the golden pocket 786 value area low 66,840 to $66,089. Oh, by the way, guys, I'm 33. Few people guess that. A lot more 37s and 40s in there, though. Disappointing. Gonna have to start a new skincare regimen. Shout out to Philip says, for me, it makes scene. It looks like 22 without Terra Luna. That would be also other bear markets. How it, oh yeah, could be, yeah. Yeah. Again, I'm not going to try to predict black swans or anything like that. Just because they're called black swans for a reason. I mean, there are some potential risks of certain black swans happening, but it is going to be really dependent on, you know, it's going to be a hard thing to guess. Maybe it won't be shocking when something happens, but yeah, we'll have to see what it is. But, you know, if we don't have any kind of like big bearish narrative, I don't know. You know, typically that does happen. And, you know, we do also, where's that 3 hour? 3 hour SFP is confirmed here. Yeah, so 3 hour SFP is finally confirmed there. Again, I would be very, very cautious on the way down. 68,646 to 68K. And again, right, if it were to come up and shoot into the value area high, not super shocking there. Because, again, I do prefer to take shorts at the value area high. If I did take a short before, right, I wouldn't be surprised, especially if you get the bigger pullback, to push into that 68K POC. That would really, I'd love for that to hold. If we do get the pullback here, hold it. That would look nice and clean. Nice push from the value area low above the POC, retest the POC as support, push into the value area high. But again, like you don't really have like super clean bearish divergences up here, but you know, obviously the 3 hour SFP could be a thing to look at. 4 hour SFP also confirmed with the VWAPs rolling over. So we'll see. If we're going to get a bigger pullback here, guys, I think 3 and 4 hour red dots are going to be the thing to do it. But with money flow, looking the way it looks here on some of these time frames. Now, again, remember, money flow has been choppy. There's just nothing I can do about that, right? But at face value, money flow crosses green. Typically, it does indicate higher lows and higher highs. Zone number 1, zone number 2. We lose this, we'll cover it live with you guys tomorrow. So next target to the upside, 70,000 to 70,200. Targets to the downside, 68. Call it 68,650, 68,670 to 68K. And then down here to the value area low, around 66,430. Got to pay attention to the golden pocket retracement in case you front run the value area low. So that's what I'm looking at here. We'll see what happens. And if you just tuned in, scrub back to the beginning of the stream to talk about or to see what we talked about here with the potential liquidity sitting up here with our low volume gap and what that could mean if we break those levels and see a much, much bigger rip through that low volume gap. Things could get exciting. Same thing, same plan, same thing long term, right? Again, we're just back inside value here. This is actually really nice. We were outside value, undervalued. We're back inside local value, back up, right? But same thing as we talked about here, 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 and here, right? Well, not here, but here, here, and here. Break above 72K, big low volume gap above. A lot of shorts could get squeezed. Not a lot holding you back from, I would say, 78 to 79K. I would say 75 to 78K would be the first stop where you could get kind of caught on. And then once you break above that, I'd be looking up towards about, 83 or 84 to $86,000. So that's what we're looking at. We'll see if that 90-minute and 80-minute money flow crossover can continue in to the green for the bigger push up. But until then, just going to look at this from a ranging perspective. We'll see if we can make it up to that value area high. All right. So I think that's all I've got for you guys today. We'll see what happens here. I would sit here and wait to see if we get the bigger pullback, but of course, we could be sitting here all day for all I know. And I do have, I'm going to say it. I have tax stuff to take care of, which is very important. Pay your taxes, guys. I just wish they made it a lot easier. I got the money. Just come take it. Take it from me. Don't tell me to do a bunch of math and then tell me that you're going to call the SWAT team if I do the math wrong. Just tell me you owe me this much. Come to my doorstep, and I'll give you cash. Please, for love of God. God, I hate taxes. Oh, my God. I don't mind paying them. They're just so annoying. So annoying. But always pay your taxes, guys. Not financial advice. But anyway, guys, with all that being said, that's all the time we got for tonight's live stream. I will, what did we go for? 2 hours and 10 minutes. We'll see if this pump can continue, but watch that money flow in the 80 and 90 minute, and we'll see if we can get that local pullback. Watch the 4-hour red dot to see if that local pullback will continue. That's all we got for today's live stream. I'll see you guys tomorrow. Hasta pasta. Frankie Candles out. Bing bong.
Money dance, deposits hit. Charge print checks and we pop champagne quick. Money dance, wrist too lit. If the market move, we get paid off it. Money dance, bags advance. Private terminal, let us see stands. Cash in the safe, bank wires in hands. We don't pray for wins, we command the chance. Jet lounge quiet, warbling glass. iPad glowing, I'm watching the NASDAQ. Charge skill print while boarding the flight. Volatility funding the life I design. Rich and Millie catching sun through the shade. Wish cost more than they salary made. They spreading pump, I'm fading the move. Then I short the top while they chasing the news. Money in the accounts, money in the safe. Money in motion, stacking by the day. If the candle shake, I don't feel a thing. I increase size when the fear hits the spring. We don't chase hype, we execute plays. We don't need luck, we operate with edge. They need green just to feel okay. I get paid when the structure breaks. Money bad, deposits hit. Charge print checks, only pop champagne quick. Money bad, wish too late. If the market move, we get paid off fee. Money bad, bags of vast. Private terminal, leather seat stash. Cash in the safe, bank wires in hands. We don't pray for wins, we demand the task. Money fast when me alert go off. Wire clears before the jet takes off. My watch costs what they owe in debt. Profit alerts, louder than flex. Fear hit charts, I increase size. Weak hands fold, I monetize. I don't guess, I position. Luxury funded by precision. Cash sleep heavy in hidden safes. Numbers long in multiple states. Volatility pays my flights. Discipline built this life. Money dash, money dash. Money dash, money dash. Money dash, money dash, money dash, money dash, money dash, money dash.